Hi everyone, today we're going to start off with the news, talking about the debt limit once again, then we'll go over Max Payne, as well as the Fed futures and economic calendar for tomorrow. Then I'll get into the charts, and then we'll finish up with my results for the day and my thoughts going into tomorrow's session. Don't forget to check out the Patreon as well as the Twitter linked in the description. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the news, looking at Janet Yellen's comments here today, she reaffirmed that early June default date for debt. We talked about previously that we could make it through the end of July with taxes that are coming in, but Janet Yellen thinks early June is still the time frame where the government could run out of money. And just to hit both their talking points, Biden came out and said that there is a desire on both sides to be able to reach an agreement, and he thinks that they will be able to do it. However, McCarthy said that they are pretty far apart on their goals and that he doesn't think the White House wants to do a deal. Moving over to Paul Tudor Jones, he came out and said he thinks the Fed is done raising rates and that we're going to see stocks go higher for the rest of the year from here, which is a pretty bold prediction. There are a lot of bears out there, me included. I think there will be at least one more pullback of significance before we get any kind of continuous rally. But Paul Tudor Jones coming out and saying that stocks are going to finish higher on the year. He cites the fact that CPI has been declining for 12 straight months, which has never happened before in history, so he thinks that they have declared victory on inflation. And he also believes that there is plenty of dry powder, meaning cash on the side, waiting to be put to work in the markets, which will drive up the value of stocks. Moving over to Microsoft and Activision, the EU approved the acquisition, but remember the last issue was UK blocking this deal because they felt that it was anti-competition. So the EU passing this doesn't necessarily mean that this acquisition is going to happen. We still need the UK to approve it. And they go on to state that here. They say that the UK still blocked it. So the EU passing it does not mean it's going to happen. They still think it's going to reduce competition in the cloud gaming market. We've talked about this before, so I'm not going to go into a ton of detail here. But understand that the UK is still blocking it, and Microsoft needs approval from all parties before they can go forward. Moving over to Max Payne, this really hasn't changed much, but I do want to continue to highlight it here this week because it is that third week expiration. Tons of options here in the market. Put call ratio still very high, again indicating that we're probably not going to see a major breakdown this week, and I do expect dips to be bought up. Lots of puts and calls here at 410. Max Payne is at 405. But like I said in the weekend video, I don't expect these puts to make money, and there's not very many calls here to counterbalance all of those puts. Moving over to the Fed futures, interestingly, after Paul Tudor Jones had those comments, you can see the percent chance of a pause has actually gone down from 84.5% to 70.6%. So a slight decline here, which is interesting. But when we go down to September here, you see the highest percent chance is still a cut from current levels. So if we did get a step up in June, which I still don't think is going to happen, but if we did, then we would have to get a cut in July as well as September to get down to this target level, which is currently at 43%. That's definitely pretty optimistic in my opinion. I think a pause is likely, but I don't think we're going to get a cut by September, but that is what the markets are pricing in right now. Moving over to the economic calendar for tomorrow, don't forget we have retail sales, headline, and core here at 8:30 tomorrow. That'll have a pretty decent impact. The expectation is that these are going to improve pretty dramatically from minus 0.4 and minus 0.6 to 0.4 and 0.8. So big step up in retail sales, and if this meets or exceeds expectations, that actually could be pretty bullish for the markets. So watch out for this one early in the pre-market. Looking at earnings for tomorrow, here you can see Home Depot, Baidu, and that's pretty much it. So we're coming to the end of earnings season, but don't forget later in the week, we still have Target on Wednesday and Walmart on Thursday. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. You can see we ended up getting a slightly bullish day from the close, but we did not take out the high from the pre-market yesterday or the pre-market this morning here on the SPY. So definitely some weakness, but we're still chopping in the zone. You can see we've been sideways here since the end of Friday the 5th all the way until today. All these EMAs and SMAs here on the hourly chart are on top of each other, definitely range bound. We've been talking about this for a while here, and we tagged that lower level here at 410.54, and now we're starting to range back up to this 414.69 level in the short term. Remember, we have options expiration this week, so I don't really expect these lows to get taken out at the end of the week. Doesn't mean we can't break down and then see a rally back into the zone at the end of the week. Certainly possible. And looking at the daily chart here, you can see we rallied into the zone. We are at this previous high. We continue to consolidate in this zone. And to me, this just looks weak. So we're on top of the 21 and 9 EMAs as well as VWAP. We continue to throw wicks to this lower level, which means we're continuing to test that zone, and it's holding here in the short term. But once all these puts exit the market on Friday, it definitely would not surprise me if we saw this start to pull back early next week, or if we saw a move down into this zone, down around 405, and then rallied back up above 410 to finish out the week. Moving over to the NASDAQ here on the hour and the day, you can see we gapped up, filled the gap, and then rallied similar to the SPY. Did not take out the pre-market high from yesterday, so somewhat sideways price action here today. You can see a slight higher low setup, which was interesting at the 324.60 level, which ended up being a nice little purchase into the close. And at this point, looking at the daily chart here, you have to be looking at the August high, which to fill that gap would be sitting up here at around 328.44. So looking for a little bit more upside here in the NASDAQ. It continues to look quite bullish, holding above all the EMAs and SMAs. But looking at the daily structure, this is clearly a bearish rising wedge, and it is starting to run out of momentum. I think we'll get that last push with the options expiration, and then we'll get that bigger move to the downside. Moving over to the Russell and the Dow on the 4-hour, you can see the Russell gapped up and rallied. It was actually the strongest of the three here today. Closed higher than Monday's highs, finishing right at the 144 EMA here at 174.91. Got above my 174.38 level. Got very close to testing that 200 SMA at 175.77, then sold off here a little bit into the close. We'll see what happens if this continues to move up. Maybe we get a retest of this 176 area, but this is starting to look more bullish coming out of the Monday session. I kind of expected this to continue lower and potentially break down from this trend line like I talked about in the weekend video, but this support is starting to hold, and now we're testing resistance. Moving over to the Dow, basically nothing has happened here. We continue to move sideways. We continue to test this 332.44 level, as well as getting close to that 200 SMA on the 4-hour. And right now we're trapped between the 21 and the 9 EMAs, so basically no developments on the Dow. Moving over to Apple and Tesla, you can see Apple broke down a little bit, ended up closing lower here today, which is interesting. You don't usually see the NASDAQ go higher with Apple going lower, but that is what happened. We retested this trend line. It continues to hold, so waiting to see if this breaks. If it does, then we might look a little bit more bearish, but for now, we're still holding at support, and we are in a bull trend on Apple. Looking at Tesla, on the other hand, this is a longer-term downtrend. And this move back up to the 144 EMA on Friday last week does seem like the last push of this counter trend rally. Got that test, and we're starting to break down here now, well below the 9 and 21 EMAs on the 4-hour chart, as well as VWAP. Momentum also bearish, RSI looking more bearish, and I would expect Tesla to move lower tomorrow. All that being said, you can't ignore the 55 EMA sitting here at 164.93. I would be a little bit cautious waiting for that to break down before I started to sell short and look for that price target around 160. Moving over to the drivers for today, we have NVDA rallying quite aggressively off of that 55 EMA here on the 4-hour chart, back up to that resistance at 289.46. We'll see what happens here. We've gotten multiple rejections in this area, so definitely interesting. Momentum is moving towards bullish, and RSI looks okay. Looking at Meta, similar thesis, bullish momentum, bullish RSI. You can see that rally off of the 21 and 55 EMAs, popping back into this area of highest volume. We'll see if this holds or if this is going to reject from this previous zone. But the fact that this is so bullish here, I would expect this to move higher on Meta. Moving over to staples and discretionary, you can see they basically both went sideways. Staples gapped up, fell back into this previous range, continues to hold in this zone. You can see the EMAs and SMAs on the 4-hour chart are consolidating here, which generally means you're getting close to seeing that pullback, in my opinion. Discretionary, on the other hand, slight gap up, big wick down to the 55 EMA, also testing the lower bound of my supply zone, as well as my 147 level, continues to hold, got a rejection from that level, and found a little bit of bullishness into the close. But at this point, we are below the 9 EMA as well as VWAP, and momentum is bearish, and RSI is below the SMA, so we might see this pull back a little bit more here tomorrow. So discretionary pulling back, staples continuing to hold in the zone, and not much has changed in terms of risk-on behavior. Moving over to best and worst sectors here today, oil and gas was the best. Once again, we talked about that being the best on Friday, and it is definitely getting a pretty powerful pullback off of pretty strong longer-term support. We'll see if this starts to hold. We still have to get above VWAP and the 21 EMA. We also have resistance at 124.13, so we'll see how this plays out. Got that island reversal, gap up and continuation, and this could certainly keep going into this zone. Momentum is definitely bullish, as well as RSI. And then for worst performing here, we have utilities. We got the gap up and then fell throughout the day, coming down into these previous lows. Momentum turning bearish, RSI definitely bearish on utilities, which generally means there's a little bit more risk coming into the market. Moving over to transports on the hour and the daily, you can see we got a nice update back into this resistance zone. Tested the 200 SMA on the hourly, got a rejection from there. Now we're rallying a little bit at the end of day. We're still below this longer term trend line, so still bearish. And momentum seems to be running out here, but fairly big volume at the end of day, which is interesting. Looking at the daily chart, this still looks like a bear flag to me. We fell from these highs. We're getting a bear flag type move. And then I'm waiting for this to break down here off of this trend resistance. We'll see what happens, but still looking mostly bearish on transports. Moving over to semiconductors, this is where we had a lot of bullishness, especially in the NASDAQ. You can see we had this lower low setup with higher RSI, and that led to a strong bullish move above this trend line. Super, super bullish, tons of momentum, taking out these previous highs. So this head and shoulders that I was watching on the daily chart seems to be finished. Got the break of the neckline, tested that next low. Now we're bouncing off of that level, setting up higher lows and higher highs. We'll see how this plays out. This could be a larger head and shoulders type pattern. We're at the left shoulder high here now. So we'll see what happens with that. If it starts to fail in this zone and we start to roll over the next few days, that would be interesting. But right now, this is still looking bullish, higher highs and higher lows in the shorter term. And we are above my 125.73 level, so looking up to 128.63 as my next resistance. So overall bullish here on semis. Moving over to stocks above their 50 and 200-day averages, you can see the 200 continues to find support at the 200 SMA on this chart. We've tested it 5 times now and it continues to hold. We're still below all the EMAs though, so we'll see what happens if this starts to break down below these levels. That would be bearish. Looking at the 55 here, continuing to chop sideways. We've been in this area since the end of March and no major developments so far. Moving over to the dollar here on the hourly and the daily, we've been talking about this one quite a lot. It looked very bullish, very strong breakout here. We're now pulling back and retesting this zone. Momentum is starting to turn more bullish here on the hourly chart, and if this starts to rally in the early session tomorrow or even overnight, I would expect that to push equities down. I thought we might get a bounce in the mid-session, which is definitely what I tweeted out this morning, but we haven't really gotten that major breakdown or the bounce, so right now we're still in a holding pattern at support, and it looks very similar here on the 12-hour chart. Big rally, slight pullback, waiting to see if this either bounces or breaks down further from this level. Moving over to the VIX here on the hour and the 12-hour, not much to say. We tested resistance once again, broke down from that level, and now we're holding back in the middle of the zone. We did establish a higher high versus yesterday, but this is kind of a double top here looking back to Thursday as well as Wednesday, so definitely resistance here. If this sets up a higher low, then look for a higher high tomorrow. That would definitely be interesting. Momentum on the 12-hour, not showing much of anything. RSI starting to roll over downwards as well. So we'll see what happens. Overall, not much happening on the VIX. Moving over to my accounts, I did fairly well, up around 200. I think it ended up being about 180 on the day. I took off my positions for the day pretty early in the session, which did benefit me. We closed well above my 326 call that I had going into the day. I do have some 327 calls here going into tomorrow, If we don't get a pretty decent move down, I'm probably going to be underwater on these positions. I'll start to roll them out in time, up and out, to see what we can do. I am expecting a little bit of a pullback, so I am slightly bearish going into tomorrow. But I do have a 322 put and 324 put, as well as a 322 here for the 17th. So I do have some puts in the market, but really these calls are closer to the market, and I am a little bit concerned about closing above 327 tomorrow. So we'll see how that plays out. If we get a nice little dip, maybe I'll take these positions off in the mid-session, but overall slightly bearish going into tomorrow's session. Let me know down in the comments what you think of the debt ceiling, or if the Microsoft deal is going to go through. That would be interesting. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.